Omar, thank you for having me. I reached out to you because I saw what you were doing with veterans and the real estate community, and I saw, all your posts and what you're doing for the community, and I felt a need to reach out just to let you know what I was doing, and I felt it would be a great collaboration. So,
I think what was extra cool about it was I'm originally from Southern California. Thomari is a former LA Dodger, so I thought that was a cool little connection there because we're both now located in Austin, Texas. I'm in Cedar Park, and Thomari, you're in Round Rock.
that's right. And, the Cali connection, I'm sure we're not, we're one of many or two of many that have migrated to Austin. But anytime you can, any type of relational type connections of California, veterans, real estate, we had so many commonalities. It only, the law of attraction, it only makes sense that we're linked up and we're able to help others, and not only in Austin, but, all over Texas and all over the nation with the content. So I really appreciate the opportunity.
Oh, absolutely, absolutely. So we met through Facebook. We want to create a lasting impact, and ultimately, we understand that getting your credit fixed, especially in today's times, because from what I'm seeing in the marketplace, people now more than ever have been using their credit cards to help just get by, and especially with all the living expenses that have been going astronomically higher and higher. And I see that, the ramifications of that down the line, because ultimately what we're trying to get at here is we want to get you into the realm of having home ownership being attainable within your grasp. And the very, very step to that is fixing your credit if you are going through these tough times and maybe you're maxing out your credit cards just to get by.
Absolutely. Credit card, I get calls every day about credit card consolidation. What can I do if my rates are high? Utilization issues when they're a $1,000 card, but you've used 900 of it. That, if you don't time your payments correctly, that could make your credit score go down. And this is with all great payment history. And so credit card debt comes up literally daily. Student loan debt comes up daily. And so credit is really the bearer of entry to tap into government assistance, and so if you don't have a 640 or a 620 or depending on the lender and what program you're trying to get into, then it's unfortunate because now you're not able to get and purchase your house, which your house is one of the biggest investments that you're ever be able to purchase in your life. And so really the education piece of credit repair, I feel, is like the missing link, because when we're to educate our clients, we can break down how to pay the credit cards. When it comes to credit card consolidation, and not just consolidation in terms of like there's some credit card consolidation companies that tell you to stop paying your bills, which that's one of the biggest misnomers out there. And it's almost like on the education side, some of these clients, they're literally being told by companies to stop paying their bills, which that will be a huge hindrance to their credit. And so
I see.
for us, we try to just educate the clients and let them know how paying their bills are. And then when it comes to their due date versus their end date, we can kind of coach them on keeping that 1 to 25% utilization, which is very important.
Now more than ever, if you are a home buyer or are thinking about purchasing a home between now and the next year, we are heading, if you live in the Austin area, heading into a buyer's market where it's now your turn to we're going to have more inventory come on the market. We're going to start seeing prices drop and to a normal that makes sense with the mortgage interest rates where they're at. So if credit is a little messed up or you need a little adjustment or need some help, right now is the time to start looking at that. Because, correct me if I'm wrong, Thomari, but the more time you have on your side to fix your credit, the better off you are.
Or you hit it on the head. Time being your side, and really creating time. Anytime if you understand where you are in the of credit, and you understand your buying power in the market, you can essentially buy time by going through a credit repair company where if there's collections, charge-offs, medical debt on your credit, that, through consumer law, through the Fair Credit Reporting Act, you can legally get those items removed. And now, when it comes to credit and which items can you get removed, it's really just understanding what companies are reporting on your credit. If you understand the companies, like the collection agencies, and the creditors, and you understand their rights and your rights, then you're able to accelerate the process and create more time. Because if not, these items stay in your credit for 7 years, and 7 years is a long time. And so if we're able to accelerate that time frame, and then also educate the clients on how to manage their utilization and pay their credit cards on time, and pay their student loan payments on time, or if they have to get those payments deferred, having the right companies that can be advocates for them. Because when it comes to student loan debt, when it comes to credit card debt, being able to create more time as far as how that's reporting on your credit and your debt to income ratio. Now, if we're able to put our clients in a better position by working together as a team, that's how it's a win-win for.
Absolutely, I agree. And you hit something a key point that I wasn't aware of, which was as the consumer understanding your rights, so you can almost come up with a strategy to kind of fight to get your credit in repair, right? Because the corporations understand their rights, right? But the consumers lack that because there's less awareness, less education, and that's where we come in.
Absolutely, Omar. So one of the things that we don't go to school for typically is credit.
Hmm.
You usually from the school of hard knocks, and so you get that $500 credit card. You think it's an unlimited ATM, and what happens is, once you becomes a charge off or you don't manage it correctly, you fall in what we call quicksand, quicksand. And when you're in quicksand, those 7 years, it's really multiply those 7 years by, and it's all relative to people, but it could be like easily 10 years, 15 years, because once you're in that quicksand, it's really hard to get out. And so, what we try to do with Credit Pulse is we sit down with the clients and we really find out what are their goals. What are they trying to accomplish? If they've been in the military, what VA programs are they trying to qualify for? And things of that nature. And so that's basically what we try to do, and try to just empower our clients, and so they know, so we can help them with their goals and what they're trying to accomplish.
That makes a lot of sense because I feel like each person is kind of unique in their pain points, and you create a custom solution for them.
Correct. And really about what they want, and get as close to their want with their. It's almost like a wish list. At Christmas, when you're little, you write this wish list of what you want for Christmas. We sit down and we ask the clients, what is your wish list in terms of purchasing a house? What's your timeline like? And so when it comes to credit, we 30 to 90 days, which, you know, it seems like to some, it may seem like a long time, but it's definitely a lot quicker than 7 years. And so when we tell our clients that, it gives them hope. It gives them the hope of, like, well, maybe if I don't have to wait 7 years and I can literally within this year purchase this house, now what are my action steps of what I can do on my end to my process of being able to purchase, which, doing this, being in this business for 10 years, we've been really good at being able to work as a team with our clients, because it's really a true team effort on what they're doing and what we're doing on both sides to accelerate the whole home ownership process.
Wow. Wow. I really want to bring up a good point of like just being really real here because if you've ever spoken to a real estate agent or someone in the mortgage lending business, they're always going to tell you like, hey, to be a good buyer, you want to get pre-approved, right? Get pre-approved so you can submit a very good offer. But really, the very step before all that is what's your credit score look like because that's going to affect everything else. right? So credit repair, if your credit isn't really up to par to even qualify for an FHA loan, is literally the very first step to on this journey of home ownership.
Yes, and it's a collaborative effort because we have the yourself, the realtor, we have the officer, we have the credit repair company, and it's the client. And so we all have to be kind of working collaboratively to accomplish the client's goal. And so when we're able to break down the report and break down the goal as far as, let's just say it's an FHA loan and they need a 640 score, but they're at a 580. And let's just say they have three collections with TransUnion, three collections with Experian, and three collections with Equifax. So those nine collections, right? And so what we do, we know on our end, we're going to get the minimum of five deletions out of those nine. And on their end, uh, they have to make sure their credit card payments are made on time. And so now we're at gap. And so that's how we're able to see scores go up, 50, 100 points at once, I mean, within a 30 to 90 day time frame.
Wow, wow. Hearing that really gave me hope, right? Because I think we see in the news a lot of these major corporations, getting all their, declaring bankruptcy or getting a loan from the government and just getting a bailout. And you never hear a way out for the consumer. And what you just said, being able to look at some of these delinquencies and maybe getting that completely off your credit report, that is hope. That is almost the same thing, but for the consumer end.
Correct. And I've had clients that literally they're in tears because credit card debt, student loan debt, it's like depressing for not only the clients but their whole family because they kind of get stuck in maybe a house where there's you know they have their whole family living there where if they have some type of solution, maybe they can get a bigger house where everybody gets a room versus, kind of cramming together in a small space where they have to make it work until they have a solution. Or they got a job promotion, but their credit's still low, so they can't tap into the income that they're getting. And they could have plenty of money to afford the house, but just because their credit score isn't up to par, they can't get qualified. And so now they may, instead of going FHA, they have to go conventional. So that's a difference of 3% versus 10%. And so that's a huge swing rate, for some families. That's the difference of maybe becoming a homeowner and have rent for multiple years. And so, really, creating opportunity for clients is what we specialize in, and working as a team with the real estate agent, with the mortgage lender, with the client, and with us. Now everybody kind of knows their role, and until the client kind of has that hope, all right, what's my role? What do I have to do? What are my action steps? And when you can lay that out where it's very simple, that makes it to where now their goal aligns with their action steps. And anytime your goal aligns with your action steps, that's really where it's not really a dream anymore. It's more reality in motion versus a dream. And so when it's reality in motion, it's more tangible. You can, now you know every day when you're understanding when your due date is for your ending date. This information is going to directly help me raise my score. And if I'm monitoring my credit on a third party so they don't run my credit just to see it, now I can literally see my score going up in real time. And this allows the ability for the client to take ownership of what they're trying to do and where they're trying to go in terms of home ownership.
Well said. Well said. One thing I really, really want to stress is that when it comes to credit repair, especially if you see like probably the bigger, more internet kind of web-based kind of credit repair services. I mean, I see it for real estate. I think of like Zillow and Open Door as far as like these big virtual brokerages. And the one thing that they always fall short in is the customer service aspect, right? Where you probably can call and not get talk to the same person, right? And I know the way I have my business set up, customer service is number one. I know Thomari, you feel the same way because um, at the end of the day, especially if you're talking about credit repair, if you're talking about just trying to navigate the homeownership journey, it's a very emotional roller coaster.
It really is.
And you want somebody that will be kind of by your side. And I know, me being in the Marine Corps, you being into sports, we understand like that kind of mission of being a part of something bigger than yourself and collaborating with one another. And I feel like that's what you'll get when you work with us.
Oh, absolutely. I mean, your credit, even your social security number is like it's so big in America. Have everything's attached to your social, your credit file, and customization and that protection is sacred. And so having that customer service of having empathy, even if some of these big box companies that they get into the repair space where they don't have that empathy of somebody hearing story of what they went through. Maybe it's a death in the family, maybe it's a car accident, maybe it's a divorce situation, and then sitting down with that client and really understanding what that really means to a family and how that can and that kind of tells the story on the credit report on why it's in the low 500s or the high 400s. And once you see that, I mean, I typically when I look at a credit report, it tells a story, but then hearing it from the client, then it's like that aha moment of like, oh, that makes sense based off of the score and based off of hearing what happened. And having that sense of empathy, I feel is one of our core values, and customer service is another core value. So understanding how both of those work together, it really allows us to have that connection with the client. So now when we're putting the plan together, that's where that, like you, to your point, Omar, that's where that collaborative effort comes into play, because now everybody's pulling for the client because we know the story, we know what happened, and we know the plan. It has to be clear and concise. So now the result is driven, and that's how we feel when it comes to the outcome of why a client sits down with us. We understand the outcome, and their desired outcome is to increase their score and to ultimately either be a first-time home buyer or be an investor. Because ultimately, being an investor, I feel as though is most people's at some point is their dream to be an investor. So now you can create generational wealth for your family. And if you're able to be in pursuit of creating generational wealth for your family, the small wins are really big wins. Buying your second home or your third home, and those are big wins because now you have a portfolio that you're growing. And if you have a portfolio that you're growing, now you have something that you can leave to your kids. And what better reward to a legacy for your kids that they have when they get older. Now they a portfolio of houses, or maybe they follow your footsteps in being an investor, and they want to be like you, like me as a father. I would love for my son, my daughter to say, hey, I want to be a real estate investor so I can design my life how I want it to be versus design my life how society tells me it should be. And so that's a huge difference. And I feel when it comes to what we're talking about, it starts with because credit is so heavily weighed on a decision of whether you even get a house or not.
Wow. Wow. I just like to say the first one's always the hardest, right? Getting the first home is always the hardest because you have to get your credit fixed. You're still learning. It's the very first time you're seeing all these numbers, seeing all this paperwork, and just kind of seeing it at first glance. And once you build the first one, it makes getting that second one or that third one that much easier. And then before you know it, you're really playing that game of Monopoly in real life. And I'm sure because of social media, we've seen just how real estate itself can be a vehicle to that legacy, to build that generational wealth, and to give the next generation a little bit of a head start instead of starting from home base.
Exactly. And when we look at generational wealth, it's like me growing up, I thought it was one of those things where it's like everybody else. It's not for me. Just I don't know. Just I feel like I'm just personally speaking, and get into real estate. And with me and my wife, we, during the pandemic, we went on the road and we went to, places that we've never been before. And we connected with communities, but we start flipping houses. And it was really the first time where we saw tangible, being an investor is, and it out of our comfort zone, out of our home base. We were comfortable in our home base at the time, Redondo Beach, and we're comfortable, being on the beach, but like we didn't own our house. We were renting and we're paying, $4,000 to live on the beach. And that didn't help in terms of like an investment because it wasn't an asset. It was $4,000 going out every month and not getting anything back. Not paying off of our home. And so, having that leap of faith and going out there and going in these communities all over the nation, it really built a confidence in us that, hey, we can do this too. And when you have that ability to kind of see what it's like to get your comfort zone and to be challenged, it's not easy, but when you do it, it becomes easier and easier. And the more that it's like a muscle, the more you work out,
Mm.
the more you put that time in the gym, you're going to see results. Your body's going to tell you, that this is a good thing. And so that's the same way we look at real estate investing, and when it comes to credit, and when it comes to empowering our clients and empowering the industry, because this is an industry thing. I love what you're doing, Omar, and you're creating this content and you're helping people with this information because, somebody listening to what we're talking about right now can take action today. It's not something that's far-fetched. 2 years, I find like we hear a lot of clients say, in 2 years, and in my head, I'm thinking like, well, I know how the credit repair process works. We're talking about 30 to 90 days potentially, for a and they in their head think that 2 years is just because what somebody told me versus like
Mm.
30 to 90 days being more reality once we really take a look at the credit and we take a look at the, and it's different. You're gonna look at what their real estate buy box is and what they're trying to accomplish. The mortgage lender is going to look at do they qualify based off of their income, and they may even have a tax person that's going to let them know where all that goes. But as long as everybody is on the same page and everyone's working together, these are really tangible goals that our clients and the industry can take advantage.
I could see that. I could see that. Okay, so I kind of want to shift the conversation a bit to these two topics I really wanted to talk about. One is a desire that I'm seeing on the marketplace with my clients, and that desire being just pricing and it being transparent, right? Because I feel like it's a very big, mysterious thing, and I definitely want you to touch on that. And the second thing is a common frustration I'm seeing, which is all like some of the surprise costs or hidden fees, or maybe like a little bait and switch situation. So Thomari, can you talk to me a little bit more about how your pricing works for your business?
Absolutely. So our pricing is a very, I feel like competitive as far as we look at volume when we price, when we give a quote to a client. We look at how can we price this to where it's affordable, it's result, and so one of the pricing models is, we don't get paid unless we get deletions. So there'll be what we call an audit fee, and the audit fee is $199. But in that situation, we won't get paid if we don't get a single deletion in 60 days. So, and if for some reason we don't, then it's a full refund of the $199. But then it's $50 per deletion per bureau, right? And so that model works really well because each deletion, they don't pay until after they get a deletion. And so the audit is really their skin in the game because, we run a business and we don't, we feel like, doing work for free consistently, we wouldn't be able to be in business. But then also, so it was though the client having some skin in the game will allow them to have to see what results happen through the transaction. And so the alternative with some of the models that are out there is that you pay a monthly fee. So you pay an audit fee initially, and then you pay a monthly fee, but it's not based off of results. So you can pay that monthly fee, $99 a month, over and over and over. And so after a year and a half, it becomes like that gym membership that you don't take advantage of, that you got in January after Christmas, and you have that New Year's resolution, and then you pay that gym membership over and over, and then at some point you keep looking at your bills and you're like, wait a minute, I'm not going to the gym. Well, it's the same thing like with credit. A model of paying $30 every month and not necessarily having to see results, or maybe seeing little bitty results, but not quite up to your expectation of what was sold to you and originally. So now it becomes another bill that you're paying, and it's counterproductive because the whole purpose most people go through credit repair is so they can eliminate bills, or they can consolidate their debt, or they can eliminate debt and not add to it without having that, without it being results driven. Because at the end of the day, if I spend a dollar, I want to see a return on that dollar. And I feel like our clients feel the same way.
I'm glad you said that last part, right? Because I know people they probably don't look at career repairs like maybe it's like that's an expense that they try to avoid because they don't see the return on that initial investment, right? And it's really just kind of bringing it back to the big picture here. It's like this is the first step, because if you can fix your credit in a reasonable amount of time, then you're going to save even more money down the line for the mortgage payment, right? Because you're going to qualify for a better loan, get better rate, and then long term, big picture here, like 30 years, you're going to save a buttload of money because you're paying less on interest.
Absolutely, Omar. You hit it on the head. When you read down the numbers, and my wife, she's all numbers, and she's taught me to
Mm.
be more conscious of numbers and how they work. But to your point, when you really break down the different, most lenders, they have a tier system of, you have this score, you get this rate, and so that being understood, you know, 30, 50 points can take you to tier levels that when you really amortize that over a 10-year, 5-year, 30-year period, that really adds up in terms of what you're paying lenders, and how you can save money instead of paying lenders that money of having a higher credit score. Now you can save that money and put it into a college scholarship fund for your kids, or maybe that's that fund that you put aside for vacations. And so if you take consideration and how every dollar does matter, and every dollar can go either in your pocket or somebody else's pocket, then and that's how you can kind of relate credit to your personal situation, and create as high a score as possible, so you pay the lowest rate that you qualify for. And so that's kind of simply putting it, the main goal for our clients.
Tamara, I'm going to be honest with you. I was prepared for you to say this when it comes to your pricing, something in the thousands of dollars, right? Because I've heard clients tell me those horror stories of that's what they were initially going to charge them. And you said it's in a couple of $100, which I think especially if you saw these stories, that is not, that's doable.
Absolutely, and it's also in compliance with credit. These companies that are charging thousands of dollars, it's actually illegal, and a lot of people don't know it. There's a regulate. We're regulated in the credit repair space, and so when it comes to pricing, taking upfront fees, and notice I said an audit fee, because an audit fee, and that with that one, be able to get that one deletion, and it's a trade-off, because you do have to have skin in the game, and then you also have to be in compliant. And so being in the industry this long, we've understood how that works, and ultimately we want to set our clients up to win. And I know for me, if I'm going to pay for credit repair, I want to see, and I want to have the ability to see the results first. So if I have collections on my credit, and I want to see that this company is really working for me. They're really in my favor. They're almost like advocates for our clients. And so, uh, being a company that's results driven, we want to be able to show the client that we're willing to do the work, and show you results, and then you pay for the other way around, because we hear horror stories all the time. To your point, Omar, of clients that have paid all this money, thousands of dollars, and they just simply didn't get the results, or they were just misled on how the whole process works. And so there's got to be a accountability when it comes to what we get paid, and the results that we give our clients.
Absolutely. And I really want to circle back to what you said earlier about our core values, right? Because I think at the end of the day, when you're looking at who to partner with as far as a real estate agent or a credit repair service company, that you want to hear them say what do they value, right? And if you value integrity, transparency, I hope that's coming across in what we're saying here. That's how we our businesses, and that's what we can expect from us, right? Because we go ahead, Tamar.
No, no, I'm agreeing with everything you're saying.
Yeah,
So yeah,
yeah.
so when it comes to our core values, like you're saying, Omar, communication, integrity, customer service, quality. Quality is huge, because and all of these values are huge. But when one of the things, when it comes to credit repair, quality kind of stuck out to us, because it's going against what people are seeing right now in the industry. And I felt some people may look at credit repair as, one of those myths. Can it even work? And so the quality of the work is important. Communicating with the clients. Our clients get monthly updates as far as what's come off the report, what's still on there, how they're from last month. And so those monthly updates really show the clients that, hey, this is what we're doing, full transparency. These are the items that came off your credit. These are that are still on there. This is how much your credit score went up. And so that with the clients, and then the ability for them to ask questions as far as, how do I even get even better. I get day, it seems like, where clients are saying, thank you for getting us up to 700 or 680. So how can we get to 800? And
Mm,
so having the ability to teach them, continue the process, is huge. But without those core values aligned, we never get to that place. And so that's why, and in any business, those core values are so important, because those are the foundations that hold the accountability on both the consumer side and the company side, because there's got to be a level of accountability on both sides, because it's truly a team effort. And I've noticed this even on this call, team effort, collaborative effort up, because it's so integral and actually getting the results that you want. If we don't have collaboration, if we don't have teamwork, then it's just basically saying that it's somebody else's responsibility versus my own. And if everybody's pointing their finger at themselves in this process, what can I do better? How can I pay this credit card down? Maybe I need to do this. And if everybody says that, understanding their role in the equation of home ownership, or in their equation of being an investor, and having multiple and creating multiple streams of income based off of rents, if everyone's pointing the finger at how I can get better in this process, that's where that true collaboration comes into play.
well said. Well said. Okay, the last thing I kind of want to touch on before we kind of wrap things up here is the frustration part that I mentioned earlier, which is sometimes these surprise costs that may come in the middle or towards the end of like the services. Can you speak on that a little bit more?
Oh yes, the hidden fees. Yeah, you just have to, just like any business, read the contract, because at the end of the day, uh, when it comes to how we price everything down, it's very simple as far as the audit fee. You know, and the audit fee is very important, because it comes down to compliance. And so we're very true to our contract to say, if they don't see at least one deletion in 60 days, that's a full refund. So as far as risk versus reward, we feel like that barrier of entry of $199 to in yourself is worth it. And then ultimately moving forward and getting results, it's either you get results or you don't. And so That's why we use a monitoring service, because that monitoring service tracks every month what the report says currently, and then it archives the previous months. So you can always go back to see the results and what happened. And so when there's hidden fees, uh, you really read the contract and really understand what will that company do for you specifically. And unfortunately, most companies, they're not going to have any kind of level of a guarantee. They're just going to say, hey, we're going to do what we can. And if they can do what they can, that's fine. But then what's the cost of that? And monetarily, how much am I paying for you just trying to see, do what you can? And so one of that we love to offer our clients, and we have part of our program, is a free consultation. And that free consultation allows us to really break down the game plan on what we can do on our end. We give the clients a fully transparent action items of what they can do on their end. And then so the client knows ahead of time where they're at in the credit repair process, or where they're at not having credit repair, what that cost would be if they don't do credit repair. We kind of evaluate on both sides. What will it cost to, what barrier entry do I have as far as the $199? Is that worth it to me? You ask that question. And then the next question is, what's the cost if I don't? At least have some type of an action plan on, if I don't go this route, then what's the alternative? And most of the time I've learned the alternative is bankruptcy. And bankruptcy is one of those things where, we're not attorneys, we're not bankruptcy attorneys, but as we know in the real estate process, if you file bankruptcy, you're out of the game for at least 2 years. And so there's credit repair, there's bankruptcy. I don't really know too many other solutions. And so really when the client offer them that free consultation, they can really just weigh their options of what is best for them and their family, and what's the on both sides.
Gotcha. Are there any red flags that you can give our audience to kind of help kind of them to see, like, if they ever come across another credit repair service company and they're trying to evaluate to see if it's good or not? Are there any red flags that you can share?
Absolutely. One red flag we touched on is taking upfront fees for actually credit repair. So I mentioned an audit fee earlier, and so the audit fee it keeps us in compliance, and so a red flag for me would be if they're wanting upfront fees, if they're wanting thousands of dollars to get results, or hundreds of dollars, what I mean, like five, six, $800, and we'll see what we can do. And so that comes into play as far as what they're charging versus what they put on paper in a contract. Because we know in business, it's not what people say, it's what they're willing to put in a contract to bind them on what they say. And so, I think that those are the biggest, that's the biggest red flag, I would say. And then, I just feel like just clients doing their due diligence, read reviews. I think that's one of the things that my wife does when we go to a restaurant. She's going to read the review of a restaurant, and the restaurant gonna have good reviews, bad reviews, or somewhere in between. And then you as a client and you as a consumer can take advantage of those reviews to make a decision whether I'm going to move forward in the credit repair process. And so I feel like as far as due diligence really plays a big part in the credit repair process, because if you're doing your proper due diligence and you do your research on the company and you ask for reviews. We love our video reviews because it gets for them to see real people talking about their experience with us. And that's the thank you I feel like we can get, or as a somebody saying, I am willing to put on camera, or willing to write a review online saying, hey, thank you for your services because this was allowed my family to buy this house. And when that makes us really good, because it's like we've done some really good work, and then that thank you, and willing to put it on camera or willing to write a review is invaluable, because then it makes you feel good, and then
Mm-hmm.
also when they tell their family members, and our business is based off of referrals. We do very little marketing and advertising because over the last 10 years we've been able to continue to be operational because people tell other people about our services. And in business and in marketing, that's the best thank you can get,
Mm-hmm.
where somebody's telling somebody else of their services. So that's really free marketing when you think about it. We're not having to pay thousands of dollars in marketing because we have people telling about their experiences and how happy they are, and what we're able to help them with. Because the alternative to that is that we're providing a bad service to people and them telling their friends and their family. We know that that's the worst thing that can happen in business because the longevity of you being in business is really in jeopardy. And so you know referrals, and that's why we price our pricing the way we do, because it's really about creating that ability for them to have a low barrier of entry and then see the results, because then they can tell other people and then we can help others through their experience.
Well said. Well said. And just say, because I'm in real estate, I speak to a lot of credit repair service providers and companies, and you are priced very competitively. I love that you said you're very result based driven in your pricing strategy, because that is what I like to hear as far as like uh, when I'm from a credit repair service company. So that's really wonderful to hear, because that means that you genuinely don't want to price people out, and you also need to stay in business and stay in compliance. So that's just awesome to hear.
Well, thank you, Omar, and I really appreciate you saying that. I'm humbled. I really appreciate that because I'm really passionate about helping others, and that's why we connected, Omar, because I saw how passionate you are as far as helping veterans and helping home buyers and educating them on their process, and giving them information, and even have a channel right now. So I know it comes from you have a heart, and you want to get this information out because it's going to help others, and it's going to allow them to provide for their family and create generational wealth. And so I just want to thank you for the opportunity to do this with you, and look forward to doing many more.
Yes, I'm glad you said that, because we are starting this series talking about credit repair. We have all these topics we want to talk about to shed more light, more transparency, and just how this works. Because I feel like in credit repair and mortgage lending, there's just so much stuff that happens behind the scenes that people just don't see or unaware of, that we can shed some light on, right? And in our conversation, I was making some notes because there's three little things that I was like, oh man, that's a good topic we should cover next. One being, how do you read a credit report? I think we should do that one next.
Absolutely.
And talking about what items are getting removed from your credit report. I have no idea. That would be a good one too. And the consolidation one really kind of perked my ears. I'm like, ooh, that's a good one too. So, folks, uh, we're going to be doing tons of content like this because we want to bring this information to the masses, and showing a big part of it is just showing up and being there. So, Thomari, thank you so much for taking the time. And again, enjoy your in Florida. And yeah, I'm excited.
Thank you so much, Omar. Hey, I look forward to doing this with you, and thank you for the opportunity and the forum to be able to, help others. It really means a lot, and doing it with you, I really appreciate the opportunity.
I appreciate you, Thomari. Okay, I'll sign off for now.